Morning, market chameleons and Mr. Dimitri Pargamonic. How you doing, Dima?
Good morning, Will. How are you?
Great. You want to get started right away with the disclaimer?
Sure. How's your weekend?
It's great. Yours?
Yeah, pretty good. Pretty good. 3-day weekend. It's nice.
Yeah, always nice.
Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer, everyone. And
great job.
that, I think we could get started. Let me share my screen real quick. So we'll start with the pre-market report, what's moving in the pre-market hours. I'm going to take a look what's going on in the earnings. We had a couple earnings reports today from some banks. I think Goldman, Bank of America. We got some earnings coming up in the next 2 weeks. We'll take a look at those. I'm also going to, in the coming 2 weeks, we'll start looking more at fundamentals and valuation models as we're building them internally. I'm going to just kind of start slowly introducing some of the concepts. Also, insider trades, that's a pretty new report for us, the insider trade screener, but we will be updating that, and I'll explain later as I'm doing my own research and I'm studying what's going on, and we're going to be adding features to that insider trade screener. I'll start talking a little bit more about that and explaining the insights from the insider trades. So in the next couple of weeks, we'll probably be looking more on stock fundamentals and insider trade screeners. Having said that, let's get started on today's pre-market activity. So these are stocks trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to filter out first by higher market cap stocks, see what's going on there. I'm using the market cap filter. Stocks $20 billion or higher in market cap. And let me see, why is my stuff slow? Let me just refresh my screen real quick. Let's try this again. Market cap 20 billion or higher. So here we got UMC up 7.1%, 171,000 shares. I don't see any, I'm not picking up any news right now. TME up 5.3%, 79,000. Plug. There's a news alert there. It looks like maybe they hired a new general manager, up 5.1%, but nothing right now sticks out, not with big volume. They're all under 1 million here. But 63 made the percentage gainers list in this group, 5 on the percentage decliners list. From that perspective, looks like favorable more towards the bullish side than bearish side. I'm going to unfilter this report, see what's popping up top. So ACRS, that just popped up 90% in the pre-market hours on 2.7 million shares. I'm just going to hover over this just to take a look at the news. So it looks like that is a biotech stock, reported some positive data. So you could go in there, read more about that. TNX, also very small market cap stock, 22.5 million, up 60% in the pre-market hours on 8.4 million shares. Looks to me that that's like an acquisition, just hovering over those headline news. GRTS up 41%, 874,000 shares trading in the pre-market hours. Also low market cap stocks, 302 million. That looks also like a biotech stock, something with COVID. Nothing else really is jumping out. So if there are no questions, Will, I'm going to go to start looking at the earnings.
Sounds good.
Okay. Let's take a look. First, I'm going to take a look at this earnings calendar. And here we have it just is defaulted to today's earnings. So anything that's reporting here before the market opens, after the market closes on today, That's the default right now. You could change that up. If you're looking for tomorrow, day after, you could change it up here. Let's stick to today's earnings. So these here, Bank of America, you see here reported before market opens. If you want to read that press release, you click on there, and that'll go to that press release. This way you could go read more about it, what the company is saying. I'm going to close this for now, but that's what this is for. Here it's giving you the conference call. This is what Bank of America did its previous earnings. This is the expected move for this earnings. So expected move, it's up or down in either direction. Remember, we're looking at the options, buying a call, buying a put, that's a straddle. So it's telling you the magnitude of the move. That's what so far it's moving into pre-market hours. Couple things here also to know, besides going to that press release, reading the news, is these conference calls, right? So it's telling you over here, for example, Goldman Sachs, they reported earnings. So they issued a press release. You could read about their earnings, but at 9:30, they're going to have a conference call. And that's where management, and those a lot of times are more important than the actual earnings release itself, because that's where the management tells you what they first explains the numbers to you, and then they tell you what they're seeing as far as future outlook goes. So a lot of times that's where the most important part of the earnings is in that management conference call, management notes. And you could see right now, Goldman, they did release, right? It's up 2.4% in the pre-market hours. The expected move was 4.5% in either direction. But again, wait for that conference call. Something can change based on what they say. And a lot of times you'll see a company beat their earnings, but the stock is down. Sometimes you see them miss, but the stock is up. And that's because what's behind the numbers is more important than just the number itself. Okay, so wait for those explanations. Again, that's why you have these earnings conference calls. So you see some of them reporting before the market, but you still have that earnings conference call coming up later in the day. Sometimes it's after the market opens. So just wanted to kind of show you this part of the earnings calendar. Again, other things that are in here that could be important is between earnings, a company could always issue a guidance, right? Well, this is what we're seeing prior to reporting our earnings. Sometimes they'll guide higher, sometimes they'll guide lower, and they'll give you some explanation behind what they're seeing, or they'll issue a preliminary report. So this preliminary, there's still an earnings that is coming up, and those numbers can change, but they're giving you some guidance about their financials or some guidance about their business. And that could be very important, especially if you're trying to create valuation models or forecast earnings, and where do you think the P ratios are, or where the earnings growth is. You want to pay attention to that, because that would go into your model prior to earnings. So you could just click on there and read those preliminaries. See, it's here you go, preliminary results. You know, they're letting us know already approximately where do they think earnings are going to be. They're letting us know approximately what they think their gross margins are, earnings per share, right? All over here, they're giving us a range. Look, where they think the net income is going to be, 191 to 199. This is all good information. I don't even know how many people are paying attention to that, but you know, they're already slowly guiding you towards where, you know, earnings may be when they announce. Okay, and that could also play into the options, because as you get more and more certainty ahead of the earnings, that volatility could also be muted based on, you know, what they're saying. And that's for Lumenton. I thought it was
definitely all those numbers go into the analyst models, and that's where they get their recommendations and how they put out, you know,
the problem advice. Is like and I've been doing this for a long time, and I don't know how these analysts are coming up with their numbers, because there's never any explanation how they came up to the conclusion. They just give you a number. They're like, well, how did you, and sometimes it's very wide range and I think some analysts are just following whatever the average is, and they say, here's my number right now. So unless there's like some logical explanation behind this analyst number, and you could show me how you got there, and I could agree, I've never known anybody who's looking at these analyst numbers and by following them has been successful. So it's up to you. Look where the analysts are putting it, and look where the guidance is, right?
Yeah, no, I would say the guidance is the number. That's
the guidance from the company is more important than any analyst.
Yeah, for sure.
So the analysts should be taking that into account, right?
Yeah, I'm assuming that affects their models.
That should be affecting their models. Yeah, if they're paying attention, that should be. But you should get used to doing your own homework, right? That's how you find your edge. Start doing your own homework. Start reading it. Start putting the pieces in the puzzle together. So I'm just showing you, where these reports are, so you could start, creating your own spreadsheets, creating your own outlook. And what else is important is the analyst, like I said, it's not the number itself. It's understanding what is important to this company. So there are two types of earnings that are reported. So you'll get, when a company reports earnings, like here at Goldman Sachs, let me show you something. So Goldman Sachs, they reported earnings. I'm going to just show you the estimates, right? So here, this is the earnings per share estimate. This is the actual. So you can see, they're like, it's not like these analysts are getting them right. There could be a very wide range. The point I'm making, though, is that these earnings per share that Wall Street's following, that analysts are following, would be non-GAAP earnings per share. Now, GAAP, GAAP, General Accepted Accounting Principles, that's what everybody follows and files with the SEC. But not every company is the same, okay? Not every company's model is the same. For instance, REITs are much different than other companies because they have very large, depreciation and amortization because of their assets. So they give you the GAAP number that gets filed, with the SEC, like a standardized accounting, and then they give you a non-GAAP number, which they say this is really the important number, and that's what analysts are following. So most of the time when you're looking at analyst earnings per share, that's a non-GAAP earnings per share, and that's what they're looking at. Are you beating that number, right? So remember, GAAP and non-GAAP, and we're going to talk about it more as we, in the coming weeks when we start looking at more at the financials and kind of valuation estimates. But again, this number, earnings per share, this is before they even filed, so when the companies issue a press release, they'll give you a kind of non-GAAP rundown, right? Sometimes they'll match, sometimes they will match. They don't always, but they'll give you a rundown, and then later on they're going to file with the SEC a 10Q or 10K. So here, let's just say you wanted to go to Goldman Sachs and take a look at their, you see these links. You could go to the SEC right now, filings, you just click that, and this will probably be an 8K, right? So here's an 8K. So an 8K, this is whenever they announce anything material to the company, they'll file an 8K with the SEC. Later on, they're going to do like a 10Q or 10K, which is the official GAAP numbers. And you could go in there and kind of read through it, right? So open it up, and you could go through it. And this is important because this is kind of like what the company is really telling you, where they're headed, what metrics are important to their business, where the bulk of their revenues are coming from, where they're focusing. That's where you kind of really learn much more about the business, going through there and reading this, and just kind of getting used to doing that. I'm going to close this up. So just wanted to kind of show you guys real quickly some of the tools to start looking at. Having said that, let's take a look at what's going on for upcoming earnings, unless there are any questions, Will.
No, just Jake had some funny comments about non-GAAP and GAAP in the chat. Everyone should take a look at that.
Yeah, well, and it's up to you to start reading it and figuring it out, right? That's where you want to kind of go in there and read those, especially the management notes. So I'm going to show you one more thing. I'm not sure if this is available to you, but when you're on these fundamental reports quarterly, here, just go. This is going to the SEC site. So these are their quarterly reports, so go into the documents, open them up, hold on. Did I open up the wrong one? So this is directly on the SEC site where they filed this stuff. I don't know why this is, you could see over here, it's a really big breakdown, but usually besides looking at the financials, understanding them, you want to go find where the notes are from the management and read those. So, I mean, this is a pretty big one, so I'm not going to, I don't want to go through it because they have a huge, but you could just do a search and find those management notes, and that they'll tell you, they'll talk about everything, their risks, their outlook on stuff. If there's any lawsuits, litigations, all that should be in that management note. So you'll get a much better perspective on that business.
Well, certainly buried within there, they have information about their trading revenue, their stock trading. I mean, they even break it down, the bond trading, stock trading, because they always.
Yeah, they'll break it down, here, like I'll show you in Apple, let's take a look at that. They'll break down their revenues for you by, here, let me see if I could open it up. Wait, should stick to this one. You could figure out, so here, net sales, products, this is the revenue from products. This is from their services. You could compare them from the previous year, cost of goods sold, products, services. So you could see where the bulk of their revenue is. I'm not going to go into too much today because I'll just take, this is probably an entire webinar, but you could see here, they have different types of breakdowns by region, by different products. How much was the iPhone, Mac, iPad, wearable services? So you see a breakdown, very nice breakdown in here. So let me close that. Again, that's really where you kind of go in there and start doing your own research. And that's what Warren Buffett is famous for, right? He likes reading these filings. He still does.
Yeah.
Huh? He loves reading. He knows how to find his edge now within those filings. He knows what to look for. Let's take a look at what's coming up in the earnings front.
Well, D, we did get a question from Lev, who I haven't seen before on the site, so I want to get to that. He's saying, do you guys pick it up as quickly as it appears on Edgar? So I guess from the information on Edgar, how fast does it flow into, I guess, I don't know if he's asking how fast do we notify people that it's on Edgar, or how fast do our fundamentals update?
This is going to Edgar. So that link is directly to Edgar, right? So if it's on Edgar, if you go to this, so if you're going to the SEC here, this is a link, SEC filing. This is directly to Edgar. So this isn't, the link is just to Edgar. If it's on there, it's on there. You know, this isn't on our site. This is on the SEC site. We just link you to it. But before even Edgar, sometimes they're going to issue a press release. So we'll pick up the press release. You know, we have a direct feed to press releases that we subscribe to. So once we get the press release, we put it on our website, you know, and then a lot of times after they issue a press release, they'll put it on Edgar. So it should be fairly quickly. We're not like delaying anything, not on purpose, you know. So as soon as we get it, we put it on the website. Again, this is Edgar.
Perfect.
Yeah, we just linked to it. Does that help?
Yep.
Should I? Okay. Upcoming earnings. Let's take a look what's coming up in our earnings for the next 2 weeks. So here we'll take a look at full report next 2 weeks. I'm going to filter out stocks that trade 5,000 option contracts on average per day or more. So over here, so we see Netflix. That's expected to report today after the market close. As of Friday's close, we're not open yet. After Friday's close, the straddle was implying a move of 7.9% in either direction. And that compares to a 4-quarter average actual move in absolute terms of 5% and a 12-quarter average move of 5.6%. So we see we're 2.9% above the 4-quarter average, 2.2% above the 12-quarter average. The high move in Netflix in the last 12 quarters, 10.3%. USB, that's tomorrow before the market opens. The straddle as of Friday's close is implying a move of 3.7%. That compares to a 4-quarter average move of 3.5% and a 12-quarter average move of 2.4%. So we got 0.2%, or right in line with the 4-quarter average, 1.3% above the 12-quarter average. The high move in the last 12 quarters in USB, 6.9%. Procter Gamble expected to report tomorrow before the market opens. The straddle is implying a move of 3.2%. That compares to a 4-quarter average move of 1.5% and a 12-quarter average move of 3%. So we're 1.7% above the 4-quarter average, in line with the 12-quarter average move. The high move in the last 12 quarters of Procter & Gamble, 8.8%. UNH, that's expected to report tomorrow before the market opens. Straddle is implying a move of 3.8%. That compares to a 4-quarter average move of 2.8% and a 12-quarter average move of 3.5%. The high move on that in the last 12 quarters, 8.2%. Morgan Stanley, that's also expected tomorrow before the market opens. The straddle is implying a move of 4.4%. That compares to a 4-quarter average move of 2.6% and a 12-quarter average move of 2.5%, with the high move in the last 12 quarters, 6.6% in Morgan Stanley. The rest are tomorrow after the market close, so we could wait till tomorrow to look at these. Are there any questions, Will?
Nope. You can move forward.
Okay. Let's take a look. Here, let's take a look at Goldman Sachs, actually. So we know Goldman Sachs here reported it's up 1.7% in the pre-market hours. I'm just going to take a look at the historical earnings just to see what happened historically. So this is from the move perspective, and then we're going to look at the implied volatility. So historically, we see that 92% of the time, the straddle overestimated the move. So whatever the straddle was estimating, 92% of the time, that was higher than the actual earnings move. So on average, prior to reporting earnings, the straddle was implying a plus or minus 3.8% move compared to an actual realized move on average of 2%. So we see about a 1.8% differential. Right now it's about 1.7%. Again, they're going to be talking, in a conference call, so that could change. Implied volatility. So heading into earnings the day before, and then what did the implied volatility tend to do the day after reporting earnings? Here it's saying on average, implied volatility declined by 11%. Okay, so this is looking at a 30-day constant maturity option, not the near term, but an option that has 30 days to maturity. And on average, the day before reporting earnings, implied volatility was 29.6. Day after reporting earnings, implied volatility was 26.2. 5 days later, it looks like the implied volatility continued to decline a little bit more, on average 25.5. So looking at day after, about 11% decline on average. So as of Fridays, the implied volatility was 34.9. So if history is any guidance, we're looking about maybe something like a little bit over 3 clicks decline in the implied volatility on that 30-day to maturity option. And this is where we are right now, 34.9. You can see the historicals day before. This is the average, the high and low. This is day after. Okay, and that's 5 days going out. So that's quickly just looking from a historical perspective, the moves, the implied moves, and the implied volatility. Let me see how much time we have here. 4 minutes. Any questions? 4 minutes go up.
Well, someone asked if you could dig a little deeper into Netflix earlier on.
Okay. So here's Netflix. Let's take a look at what happened historically. So Netflix, historically, the straddle overestimated the move 75% of the time. Okay, let's take a look here. So these are the estimates, these bars up and down, that's the estimated move in either direction. The red bar, that's the actual move to the downside. So this one, October 20th, we see Netflix reported earnings. The stock was down 6.9%. The straddle was implying a move of 7.5% either direction. So that was within the expected range. Okay, the green bar, that's telling you the actual move to the upside. So October 16th, 2019, the year 2019, Netflix reported after the market closed, the stock was up 2.5%. The implied move, the straddle was expecting a move of, they were implying a move of 11.2% in either direction. So you could see that move was more muted than the straddle was implying. So here are the summary statistics. 75% of the time, that straddle overestimated the move. On average, the move heading into earnings, the straddle was implying a move of up or down 8.7% compared to the average realized move of 5.6%. So we see there about a 3% differential. Implied volatility, we're seeing, this is looking at the 30-day constant maturity option, okay, not the near term, but a little bit further out where there's more vega, 30 days to maturity. The implied volatility declined on average by 30% day after earnings. So day before earnings, average IV 52.7, day after, average IV 36.8. 5 days later, it actually ticked up a little bit, 37.4. So that's the Netflix from a historical perspective. Let's take a look actually at the options really quickly. So this one, January 5th, these are expired January 22nd. So this is this week's expiration. Let's take a look. Stocks, let's say 500. I'm going to set up a straddle here. Let's say we sell the straddle. I'm going to load that. So this is selling both options for $39.15. Okay, so that's what we would be bringing in if we sold the straddle, $39.15. So as long as the stock it has to trade within there. If the stock trades tomorrow or after tomorrow, if it's, moves $50, then this straddle is going to be a loser from the sell side, be a winner from the buy side. But let's take a look historically. I'm going to look at the last 12 moves in Netflix in percentage terms, and we're going to apply it here. So we could see here, historically, these lines, how many times it would have fallen in within the green. So you could see here to the downside, over here, down 10.3%, that would have fallen out. 2 times to the upside, it fell out here, up 9.2%, up 10%. So this gives you kind of a distribution of returns relative to today's straddle.
Awesome.
Yeah. So there you go.
Thanks so much, D. That was great. Super helpful. Everyone, thanks for joining us. Thumbs up are always appreciated. There are a couple new faces in the chat. Please subscribe if you're not subscribed to the YouTube channel. D, great job. Thanks.
Thanks. Yep. Thanks everyone for joining. Stay safe.